Gold has gone up more than stocks at the best. So everything goes down. Stocks, real estate, commodities. Commodities have gone down the most first. Gold is holding up because it's seen as a safe haven until things failed. Same thing happened in 2008. But stocks are the lead now, and that's why I'm focusing on the NASDAQ, the more racy of the stock index.
Harry Dent, author of Zero Hour, says that markets will experience a major wipeout when the NASDAQ hits this crucial level. He predicted that a massive crash will occur amidst an already bearish market once the NASDAQ hits its 2022 low of 10,088. From its all-time high, Dent expects the NASDAQ to fall 92% and the S&P 500 to fall 86%. Here's more of what Dent had to say.
The NASDAQ is more volatile. It's more the tech stocks, the more aggressive stocks. So it's going to go up more when it goes up, and it's going to go down faster. And in the S&P 500, it's almost like when things start to look questionable, like in the last year, people say, okay, well, I'm not going to get out of stocks altogether, although, of course, I've been advising that for a while. They'll get into safer. So the S&P 500 is seen as more stable as the NASDAQ. So the NASDAQ and the Russell 2000 small caps are the more volatile indexes, which go up the most and go down the most. And that's why I'm tracking the NASDAQ. The NASDAQ is the lead index here that's leading the way, and the S&P follows. And in the end, they'll all be down 80% or more. But the NASDAQ has been leading this crash, and that's what you would expect. The all-time high was November 22nd on the NASDAQ and January 4th of 2022, just after that on the S&P 500. And let me just make this clear. All this is going back to the early 2009 lows of the last major crash, okay, after 2007, 2008 crisis. It's not erasing all the gains and all the bubbles and stuff before. It's just going back to the last lows, and I have a similar forecast for housing. Housing is just going to go back to its 2012 lows. Housing takes longer to correct. It took 6 years from top to bottom. It peaked before stocks the last time, way after. They're just going to go back to 2012. But you know what that is for the average house? 50%. That's how big a bubble we've had in housing. So that's what I mean by everything bubble. Commodities, gold is bubbled. Gold has gone up more than stocks at the best. So everything goes down. Stocks, real estate, commodities. Commodities have gone down the most first. Gold is holding up because it's seen as a safe haven until things failed. Same thing happened in 2008. But stocks are the lead now, and that's why I'm focusing on the NASDAQ, the more racy of the stock index. We had that first crash down 34%, okay? And then it bounced substantially, and it's gone back and forth. It went to make one more new low, down 38%, the NASDAQ. Now it's back up towards 11,000, and it has to break that last low, 10,088. I think in mid-August, we already started the next wave down. So that's the second point real quick. When you see a major bull market or the beginning of a new major bear market, like 1929 to 32 or 1972 to 75, there will be 3 waves up or down. And now we're talking down. So again, first wave bottom in June, bounces sideways since. We're in the third wave down now, but it has to break to a new low to say, hey, it really is that third wave, and we're going to go a lot lower. Okay, and so 10,088 is the line in the sand on the NASDAQ there. And so when we break that, it's going to go down a lot more. Next thing you know, we're going to be down at the 2020s. Now, this is just going back to the COVID lows of about 66, 67, about 6,700 on the NASDAQ. That's my next target. So that's the next wave, the middle wave. And then that'll bounce, later in the year. And then we'll have one final wave down, the third wave down, and that'll cause a bottom. And that's, again, if I had to predict today, it'd be mid to late 2024. So it takes 3 waves for a major movement to happen. We've only seen the first one, and it looks like to me we're starting in the next wave, the middle wave, but that middle wave will not be confirmed until we make a new low over the 10,088 low, which was actually in August of 2022 in the NASDAQ. So again, the time to get out is on the bounce. If you wait until we break that 10,088, it'll be down fast from there. Okay, next thing you know, we'll be at 6,700. And then you're down 55, 60%, and you're like, oh my God, I've lost my life savings. And that's not even the bottom. When stocks peaked in October 2007 and started to go down, 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 gold held up and actually drifted up. Gold was seeing itself, okay, we'll be the safe haven when things go down. We're going in a recession. Well, gold then crashed in the second half of 2008. Gold followed commodities and stocks down and crashed 45% in just a matter of 3 or 4 months. So gold was held up the longest, just like now. It's flat to up, but it went down not as much. It still didn't go down as much as other commodities, still didn't go down as much as stock, okay? But gold ended up crashing and crashed rapidly. So gold is not the safe haven. I'll tell you what the safe haven is. Anybody looks at it, was 100% crystal clear. The highest quality long-term bonds in the world, U.S. Treasury bonds. 30-year Treasury bonds would have been the best thing to hold in the 2008 crash. They would the TLT, which is an average of 10 and 30, went up 45%, precisely when stocks and gold and everything crashed together the second half of 2008. The 30-year would have gone up more than that. I'm predicting that the bonds recently will double. The TLT could double from its recent bottom at 92 in going to 186 in the next year or two. The safest bonds in the world are actually what appreciate the most when a financial asset bubble goes down and all other financial assets go down, leaving the safe haven. And again, same thing. Gold might be the last one to go down, but it'll go down in the end, just like it did before. I'm predicting gold goes down to 900 to 1,000. That will be a lot less than commodities again, but that's still a 45% fall from here. So anybody thinks gold's going to protect you here, good luck. I see gold turning around and I think gold could go to 3,000 to 4,000 in the next boom. You know my number one reason? Yeah, I have traveled, especially to India. It's the second country I've traveled to the most outside of Australia. The people who love gold the most in the world, Chinese, but Indians even more. If India is the next big thing, gold is going to boom because Indians buy and use gold both for security and jewelry and everything else, okay? Indians are poor, and the best way to show a little wealth is wear gold wherever you can, and they wear gold in places we wouldn't even think of, okay? So gold, for fundamental reasons, will do well and go up in that next boom, okay? But the safe haven, I think what will become the whole purpose of the crypto, okay, in Bitcoin. Bitcoin has the potential, from my view, and it's got to be much more valuable than that, to become the digital gold. And they call it that. A lot of people call it the digital gold. Bitcoin would have to be $500,000 or more, but at that point, it starts to be worth more than all the gold in the world, and it's more expandable than gold. The problem with gold is gold supply is running at about 1% and falling a year, and the world economy is growing at 5 to 6% typically. So gold was a good standard for money in the past. It doesn't fit a digital world, and it doesn't fit a faster and larger growing global world. So I see crypto, Bitcoin, slowly over the next couple of decades becoming that digital gold, and gold growing for better reasons, fundamental demand by emerging countries they may never get as rich as us, and they will not. I can project any country, okay? India might get up to 24,000 GDP per capita, still a third of the US, but that is 3-4 times what they are now. It's a huge boom. Those people will be driving the demand for all types of commodities, but particularly gold. So I would be a buyer of gold, and it's a great diversifier in a portfolio, just not when it's going down. I would buy gold myself a few years from now if it got down that 900,000 range, looking for it to go to 3,000 to 5,000. But I still say the best stocks and stock markets will do better than that.